Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Versace in Dubai, and these are the stories that set your agenda. Asian stocks closing in on a fourth month of gains as hopes grows for a soft landing in the U.S. We get the latest read on the Fed's preferred inflation gauge later today. Kamala Harris speaks in her first TV interview as Democratic nominee. She's now leading or tied in the most consequential swing states, according to Bloomberg's latest poll. And Intel explores its options. The chipmaker speaks with investment bankers to help navigate the most difficult period in its 56-year history. All right, good morning, everybody, and welcome to Daybreak Europe. We've got a big day ahead, another big day for U.S. data with that PCE number coming much later this afternoon. This after somewhat of a pullback yesterday for NASDAQ. No surprise why. That was led by losses in Nvidia, which ended the session down more than 6%, pulling down the NASDAQ. But as for the S&P, we got very close to all-time highs, trading slightly weaker on the session. The Dow, not shown here, but actually did make an all-time high. As we head into the European markets, European stocks futures tilted towards the red, seen opening lower to the tune of 0.2%. We have important Eurozone inflation coming up today. This after a weaker than expected Spanish and German inflation data yesterday drove some gains in fixed income. We'll talk more about that shortly. And then the FTSE 100 also seen opening up in the green. But let's switch over to cross asset and take a look at how some other of these indicators have been trading. Turn to U.S. Treasuries. We actually did see some upward pressure on yields yesterday. We ended about 4 basis points higher after a weaker than expected 7-year auction. That put some upward pressure on yields. Gold, interesting, today trading sideways, but for the month, a massive outperformer, up 4%. So a lot of money pouring in to the safe haven. The dollar also trading sideways today, but a weak month for the dollar, its second weak month in the row. And then euro, some downward pressure coming through yesterday after those inflation prints. But let's turn to how some of the Asian markets are faring with Avril Hong in Singapore. And Avril, just set the scene for us. How is risk trading overnight?
Certainly, it is mostly risk on in the region. We're back to this mode where good news for the economy is good news for stocks. Asia stocks are erasing the declines of yesterday after that upward revision on the US GDP, showing signs of strength in the American consumption picture. But I also wanted to highlight what we're seeing on Chinese stocks because they're the ones outperforming today. This is helped along by the insurance names because of solid earnings, but also wanted to highlight while we were in the lunch break on the mainland, we did get a Bloomberg scoop that Chinese authorities could be mulling letting homeowners to switch banks to get cheaper loans. This is essentially the refinancing potentially of up to $5.4 trillion of mortgages. So this would help to lower borrowing costs for millions of families and maybe have knock-on effects to boost consumption. So maybe a bit of a mood lifter. We'll see whether there's more meat on the bones on that. But as we see the CSI 300 today, last trading day of the month, potentially going with those gains into the end of the session. Keep in mind that this is a story we've seen before in June and July. Yet, as our MLive colleague Mark Cranfield has been reminding us on the blog, we're still about 10% down from the peaks that we saw in May. Flip the board. The other thing I wanted to highlight is what we're seeing on the Chinese currency today. The offshore yuan hitting the strongest level against the greenback since June last year. As you know, this has been helped along by the narrowing yield differentials more recently this week, helped along by the unwind of the yuan carry trade. But also today we got a PBOC fix that was strong. The Japanese currency, another one that I wanted to highlight in terms of data that we got today from Tokyo CPI. It was a core print that was stronger than expected and a pickup from the prior month, so boosting the case for the BOJ to hike rates again. But if you take a look at the moves, even though it's headed for a second straight month of gains on the Japanese currency, remember it was 145.5 just a day ago, so not that much of strength coming through. A reminder that, you know, Fed expectations also matter for dollar yen. Jumana.
Yeah. And just looking at the monthly performance, the yen is about 3.5% stronger versus the USD. We were talking about dollar losses for the month. Avril Hong in Singapore, thank you so much. Well, Asian stocks closing on a fourth month of gains, lifted by hopes of a soft landing for the U.S. economy. Traders are looking ahead to the Fed's preferred inflation gauge later today. For more guidance on a potential rate cut in September, let's get out to Bloomberg MLife strategist Mark Cranfield, who joins me now. Well, we've had quite a busy week of data to look through, starting from Monday's Jackson Hole reaction, Wednesday Nvidia earnings. Yesterday, we had those GDP numbers revised upwards, which is quite interesting. But then today, the focus is going to be on the PCE report. Mark, how relevant is the GDP reading going to be for traders' expectations of that September rate cut? Or does it not matter once we've got the PCE report?
It certainly has some impacts because at the moment it will have people thinking that this soft landing scenario is still intact, that it can still be achieved when you have a good GDP number like that. But people will probably forget about it fairly quickly if some of the other data has underlying factors which are not so strong. So today in the PCE, what investors will be looking at very closely is the personal savings aspect of those numbers. As Bloomberg Economics has been highlighting, there are some signs that consumers are struggling, that the savings that they had built up during the pandemic period have mostly gone, and that they're not able to sustain those savings in the way. That may drag down the inner workings of the PCE numbers. So even though it looks as though it's coming down gently, it may actually be a harder scenario than people expect at first. Now, that will obviously worry the Fed a little bit because next week we've got an employment report. So the Fed, of course, would prefer to tell investors that everything is good for a soft landing. But there is some things coming up in the next few days, starting with the PCE, that could lean towards risks of a harder landing, and that's what will be on traders' minds as they go away for their long weekend.
Yeah, that is going to be the big question post-Labor Day. Let's not forget Monday is Labor Day and a holiday in the U.S. Bloomberg MLife strategist Mark Cranfield, thank you so much for that and what we need to look forward to with those PCE numbers later today. Now, in U.S. politics, Kamala Harris has pledged to address economic woes, bolster the middle class, and negotiate a possible ceasefire in the Middle East in her first interview since capturing the Democratic presidential nomination.
My agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing. And I made that clear on the debate stage in 2020, that I would not ban fracking. As vice president, I did not ban fracking. As president, I will not ban fracking. There should be consequence. We have laws that have to be followed and enforced, that address and deal with people who cross our border illegally. And I think it would be to the benefit of the American public to have a member of my cabinet who was a Republican. We have to get a deal done. This war must end. In the meantime, and we must get a deal that is about getting the hostages out. I've met with the families of the American hostages. Let's get the hostages out. Let's get the ceasefire done.
Well, let's get more on this with Bloomberg senior editor Bill Ferries. Great to have you with us. This was Harris's first interview since she became the Democratic nominee. There were a lot of questions directed at her, a lot about the economy. What did we learn vis-a-vis how Harris is thinking about her plans for the economy?
Well, to be honest, we did not get a lot of detailed policy prescriptions from that interview. Vice President Harris talked a little bit about how she would go after price gouging in supermarkets and the food sector. She talked about her proposal that's already out there to try to help first-time home buyers, talked about extending a child tax credit that came out for a year or two during the pandemic that was shown to reduce poverty, child poverty, and then that tax credit expired. So she talked about those things, but in terms of details, how do you fight inflation more broadly? How do you get at some of the core economic issues that Americans say are concerning them? She didn't give a lot of details. That said, polls show her chipping into former President Trump's lead or previous lead on economic policy. So she's ridden this wave since being picked as the Democratic nominee, and the lack of details in her policy proposal hasn't been hurting her so far.
Well, you talk about those polling averages, and it certainly does appear to be the case that Harris has pulled even ahead. She's ahead of Donald Trump in latest polls. But will the interview that she did overnight add to that momentum, or is the race starting to stabilize now?
Well, it's hard to see how you add further momentum. I mean, she's really been riding quite a wave of donations and positive reviews in public polls. The latest showing that she has a lead over former President Trump in all of the battleground states among registered voters. Among likely voters, that lead dips a little bit and falls into the margin of error, but she's really had quite a bit of success for 4 or 5 weeks now that the Republicans and the Trump campaign have struggled to stop. So we'll see what happens next. There's just really about 8 or 9 weeks to go before the election, and very little time for the candidates to kind of change the impressions that voters have of them. But it will also be, I would expect, a lot of ups and downs in that time. And we saw in 2016 when former President Trump was first elected that a lot happens in the final 3 or 4 weeks.
Yeah, well, only 8 weeks to go. It's really crept up fast. Bill Ferries, thank you so much for the analysis of that interview. It was a joint interview, you should have mentioned, Harris and Waltz together doing that interview. All right, also coming up, Intel calls in investment bankers to help plot a path through the most difficult period in its 56-year history. We'll have those details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Intel is said to be exploring options to cope with its historic slump. According to Bloomberg sources, the company is working with investment bankers to help navigate the most difficult period in its 56-year history. Bloomberg's Annabelle Jewelers has more of the details. Annabelle, the stock is down 60% year to date. Clearly, there was a lot of pressure on Intel to do something. What do we know about their plans?
Yeah, that's right. A 60% slump so far this year. But you think about where a lot of that slump has also been, and it's just even in the last few weeks, for instance, we had those earnings out and we saw the biggest drop for Intel in more than 40 years. So the company laid out plans to slash around 15,000 jobs. They also gave a very grim growth forecast. And so, as you say, yes, there's a huge amount of pressure on the CEO, Pat Gelsinger. He took that role back in 2021 and really promised to turn around Intel at that point. But it seems like he could have been a little bit overly ambitious with his plans. So now we're hearing that Intel is talking with its long-standing bankers, the likes of Morgan Stanley, Goldman Sachs, to talk about different options for the company moving forward. There's a few up for discussion, but one of the most extreme we're hearing about is that it could spin off or list its foundry business. Now, that is an area that Pat Gelsinger viewed as key to restoring Intel's standing among chip makers. He hoped it would eventually compete with the likes of TSMC. Again, most extreme version, perhaps it won't come to that. We could, for instance, see a less dramatic step forward before we reach that point.
Yeah, but again, we were speaking about this earlier on one of the earlier shows and about the foundry business being a business of scale, and it just became increasingly difficult for Intel to be able to compete with the likes of TSMC. You talk about the potential spin-off of its foundry. Do you know anything about the timing of these options?
Yeah, so the timing of the options is also what we've been hearing from sources here. So we do understand that there's a board meeting that's taking place next month in September. And so at that point in time, these options could be presented. We do understand that no major move here is imminent. It is discussions that are very much in the early stages, so what we're hearing from sources here. But certainly it does seem like Pat Gelsinger is someone who is running out of time to pull off this much-needed turnaround, given we saw a loss of around $1.6 billion in the last quarter, and analysts are predicting we're going to see further losses toward the end of the year. As we said, Pat Gelsinger, someone who had very ambitious turnaround plans, including for that foundry business, and they haven't come to fruition, it seems, at all just yet.
Bloomberg tech reporter Annabelle Jewelers, always a pleasure. Thank you for bringing us the latest on that Intel story. Now, Bloomberg has also learned that the Netherlands plans to limit ASML's ability to repair and maintain its semiconductor equipment in China. Sources say the Dutch government will probably not renew some ASML licenses to service and provide spare parts in China that expire at year-end. Let's get more on this story with Bloomberg's Sarah Jacob. Sarah, what are the new curbs that the Netherlands is working on with regards to ASML's China business? Because this isn't the first set of curbs that they have introduced.
Yes, good morning. So, as you mentioned, we're hearing that the Dutch government will likely not renew certain ASML licenses, which are to maintain and provide spare parts for its equipment in China, which is expected to expire at the end of the year. The move is expected to cover ASML's top-of-the-line deep ultraviolet lithography, or so-called DUV machines. And we know that, ASML is Europe's most valuable tech company. It's the world's only producer of equipment that's needed to make the most advanced chips. So this equipment is sold with maintenance agreements, and a decision to limit ASML's ability to repair and maintain those machines could make at least some of them, inoperable in China as soon as next year.
Yeah. What is the rationale behind this latest move? Is it purely geopolitical considerations?
A lot of it is geopolitics, yes, because, we know the Dutch government's been under pressure from the U.S. government to make a lot of these moves. The context of this, of course, the Biden administration has sought to limit China's advances in the chip sector for some time now. It's implemented sweeping export controls, on China's the sale of advanced chip-making equipment to China, citing often national security grounds. We've also previously reported that the Biden administration has raised the possibility of imposing the FTPR, which is a stringent trade rule that allows American officials to control the flow of foreign products if they contain even the smallest amount of technology originating from the U.S. So the U.S. has been urging the Dutch government to take more action, align more with the U.S. in terms of China controls. And this is essentially a tightening of those measures.
Yeah, we were just displaying a screen up there showing that for ASML, almost about 50% of its revenue still actually does come from China. So what are the likely implications of the decision that they've come out with today, and how is that going to affect them in all likelihood, given so much of their revenue is still derived from China?
Yes, it's a critical market for China. I mean, China has been ASML's biggest market for 4 quarters in a row. It's important to mention, of course, that ASML has never been allowed to sell its extreme ultraviolet technology or EUV technology to China. And that's, due to US's aims to slow down Beijing's advances in making semiconductors. Now, this is with regard to the immersion DUV. China relies on ASML's immersion DUV systems to advance its chip-making technology. So for ASML, it will be definitely, it will weigh on sales. And also these new curbs put ASML under the same constraints as US peers, such as Applied Materials.
Yeah, makes sense. Bloomberg's Sarah Jacob, thank you so much for that report. Now to some of the other stories making news. Bloomberg has learned that Brookfield Asset Management is in talks with several investment funds to join its bid to acquire Spanish blood pharma company Grifols. Sources say Abu Dhabi Sovereign Wealth Fund, ADQ, and Singaporean counterpart GIC are amongst the investors that Brookfield has held discussions with over a potential partnership. No agreement has been reached with any of the funds. And ThyssenKrupp Steel Unit CEO Bernard Osborg will leave the company along with several supervisory board members and other top managers following a dispute over the troubled division's future. Dennis Grimm will take over as interim CEO of the unit. The move comes after weeks-long tussle between executives and worker representatives over efforts to lower steelmaking capacity and restructure the business. And Bloomberg's being told that Samsung is amongst the suitors interested in Nokia's mobile network assets. Sources say Nokia has considered several scenarios, from selling some or all of the division to spinning it off or combining with a rival. That is amid increasing pressure to find new growth in the troubled telecom equipment sector. Well, also coming up, are we still speeding past peak demand for oil used on our roads despite the slowdown in EV sales? We take a closer look next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The growth in electric vehicle sales may be slowing, but peak oil use for road transport is still rapidly approaching, and sooner than you might think. Here to tell us more is Luxi Hong, head of Bloomberg Neff's downstream oil team. Good to have you with us. How is this EV slowdown that we've been talking about for the most part of this year reverberating across the outlook for road fuel demand?
Yes, Jemana, we still see EV posting a pretty big threat to road fuel consumption despite the short-term slowdown. To give you some context, as of now, EVs are already displacing nearly 1.8 million barrels of oil around the world every day. That's roughly the same amount that Mexico consumes. And we expect this number to double by 2027 and triple by 2029. And it's also important to point out that even though EV sales growth slowdown is real, it's really happening, but it's not happening at the same rate everywhere in the world. So for countries like China, India, and France, we're still seeing pretty healthy growth numbers. So in the next couple of years, we still expect global EV sales to continue growing despite at a slower rate. And in the long run, the improving economics of EV will help the continued growth of EV adoption and help it spread to more price-sensitive markets like India, Brazil, and Southeast Asia. So this, coupled with the rise of shared mobility and autonomous driving, will send global oil use in the road sector peaking in 2027, 3 years from now. So that's happening pretty soon. And between now and 2050, we actually expect road fuel demand to halve, with the decline in particularly accelerating after 2035. However, without the growth of EV and fuel cell vehicles, road fuel demand would have continued rising up until 2040. So the impact is pretty phenomenal.
Right, yeah, but it seems as though, as you just said, 2027 is the year we need to be watching out for. That is the global tipping point. And presumably there is some regional variation going on within that. So who is actually going to get to that peak road fuel demand first, and who are the laggards?
We talk about the global picture, but there is a big regional difference. Actually, in mature markets like the U.S. and Europe, road fuel consumption looks like it has already peaked. And in China, with the current passenger EV penetration almost at 50%, we see peak oil arriving pretty soon for China in 2025, next year actually. However, for other markets like India and other major developing markets, road fuel consumption is likely to keep growing, but the momentum is likely to slow down in the late 2030s.
Well, with peak oil, at least for road transport in this circumstance, what does that mean for oil producers and fuel retailers? What are the ramifications?
Yeah, as we know, currently road fuel accounts for about 45% of total oil consumption. So that upcoming peak and then decline is obviously going to be a structural threat for refiners because diesel and gasoline are still being their primary products, as well as fuel retailers and even convenience store chains with exposure to the sector like Couche-Tard or 7-Eleven. So with a shrinking market in sight, we're definitely going to see more closure or consolidation for the sector. And we are seeing some producers already taking actions to adapt. For example, refiners like Neste and Valero have already been growing their presence in the low-carbon fuel markets for years, and now they're among the world's largest players in this. And we are seeing such strategy being adopted by a growing number of refiners, especially in Europe and the U.S. For example, for the next couple of years...
Luxi, going to jump in there. Thank you so much for the report. That was Luxi Hong, head of Bloomberg Neff's downstream oil team. Thanks very much. Well, we're going to cut to a break, but when we come back, we're going to be talking about German regional elections and what it means for Olaf Scholz. We'll be back. Good morning. This is Bloomberg Daybreak Europe. I'm Jemana Bersachi in Dubai, and these are the stories that set your agenda. Asian stocks closing in on a fourth month of gains as hopes grow for a soft landing in the U.S. We get the latest read on U.S. inflation later today. Kamala Harris speaks in her first TV interview as Democratic nominee. She's now leading or tied in the most consequential swing states, according to Bloomberg's latest poll. And Intel explores its options. The chip makers speak with investment bankers to help navigate the most difficult period in its 56-year history. Well, welcome again, everybody. We are going to get a check on markets now because it is that all-important PCE day, and we talk about it in the context of it being Fed's preferred inflation gauge. The markets yesterday reacting to Nvidia earnings coming through, the stock ending the session about 6% lower, pulling down the Nasdaq. But as you can see this morning, most of these U.S. majors are seen opening up in the green. The Dow actually closed at another record high yesterday. The S&P very close to it. Some positivity, some risk-on momentum really pervading in this morning session. Euro stocks futures, however, seen opening slightly weaker. Across cross-asset, though, what we saw is a marginal move upwards yesterday in 10-year U.S. notes. We traded about 4 basis points higher by the end of the day after a weak 7-year auction came through, putting some upward pressure on yields here. Gold, also interesting to watch, trading above $2,500. Not doing a lot today, but I do want to point out that for the month, the gold was up 4%, so one of the best performing assets for the month of August. The dollar as well, trading sideways today, but it was a weak month for the dollar, its second weak month in a row, so actually tracking its worst month for the year now, for the month of August, for the USD. Downward pressure as markets start to price in a more dovish position out of the Fed, and about 100 basis points priced into the rate curve as of this point. And then the euro also seeing some losses yesterday after those weaker than expected inflation prints came through for Spain and Germany. Watch out for later today the aggregate Eurozone prints. We're going to watch out for that as it comes through. But speaking of Germany, the far right could win the most votes in at least one of the nation's 16 federal states for the first time in this weekend's regional elections. Saxony and Thuringia in the former communist East head to the polls on Sunday. Let's get more from Bloomberg's Oliver Crook. Oliver, good to see you. So first of all, what are we expecting out of these elections this weekend?
Yeah, Jumana, so this is in eastern Germany, and this is a region of Germany where the far right has done very, very well over the last few months and has really been rising in the poll. The AfD, which is a party that has been really growing in Germany over the last few months and years, dealing in part due to the fact that the economy has been slowing. There's been a lot of questions on immigration. And so what we're expecting over the weekend is, though it's a little bit closer in Saxony, where the CDU may take the #1 spot, the AfD will certainly, almost certainly take at least the second spot. And then in Thuringia, we're expecting the same thing, taking about 30% of the vote, which would make it the biggest party in the East for this region. Now, what does it mean for Germany concretely? For one thing, it will make it slightly more difficult eventually to pass laws within Germany if you have more of these non-mainstream parties joining in the upper house. Obviously, there's the Bundestag. There are 2 houses, and this is the upper of the 2. But then the other thing that's a real question is really for the coalition and the governing government within Germany right now. We're expecting single-digit results across both of these regions. This is a very poor referendum for Scholz, for the FDP and the Greens that are currently governing the country and are doing so with great difficulty. And longer term, I think that if you see a lot of this sort of weakness enduring within the polls in Germany, there becomes a real question concretely next year when the federal elections happen in Germany. The SPD, will Scholz have the popularity to lead that party once again into the election? So these are all the things that we're watching going into this weekend.
Yeah, very important. Also, just a continuation of some of the themes that we got out of those European elections a couple of months ago. And on that topic, what is the latest regarding the reshuffling of these EU top jobs?
Yeah, so listen, we are waiting for the end of this week. For tomorrow is technically the deadline when the EU Commission, every single one of the member states needs to submit their candidates to go into the different portfolios that will then later be assigned in September and then voted upon. And then you get the new commission theoretically on November the 1st. Where the difficulty has been for von der Leyen is she, doesn't have all the names yet from all the countries, so that sort of causes a little bit of delay. There's been some domestic problems in some countries, which has added to some delay there. But then there's also the question about who they're going to put forward, right? We know that some of the names from already for some of the portfolios. We know that Kaja Kallas from Estonia will get the foreign ministry. We also know that Antonio Costa will be in charge of the council. But you really need to get these names out in order to have some of the negotiations on what is going to be a slightly tighter timeline for getting these decisions made. And also at a time when within Europe you have a lot of domestic distraction for really some of the biggest and most significant countries. We were just talking about Germany and the issues that Olaf Scholz is having there. But let's not forget France and the sort of political crisis there. So Ursula von der Leyen, she really needs to get these names in, begin to give out these portfolios so that they can get to work for that November 1st deadline of getting the commission started, where the priorities for the commission are really going to be security and defense, those sort of EU values, but also this big question, I think probably the thorniest question for the EU, how do you make Europe competitive in a very competitive global landscape?
Yeah, the number one question for Europe, I would say. And speaking of top jobs, we should be hearing, in theory, about Macron's pick for PM, hopefully in the next few days. Bloomberg's Oliver Kirk, thank you so much. Well, switching over to U.S. politics now, U.S. Democratic presidential nominee Kamala Harris has pledged to address economic woes and bolstering the middle class. That would be her day one priority in her first TV interview since the DNC.
My agenda includes what we need to do to bring down the price of groceries. For example, dealing with an issue like price gouging. What we need to do to extend the child tax credit to help young families be able to take care of their children in their most formative years. What we need to do to bring down the cost of housing.
Let's get more on this story with Bloomberg's Kriti Gupta. Kriti, many people are watching out for this interview because it's the first interview that Harris has done since she became the Democratic nominee. She was asked a lot of questions about her policy positions and the evolution in some of those policy positions. What did we learn?
Very, very little. And I think that was almost by design, Jumana. This is something that she and her campaign have been less vocal about because it's something that invites a lot of criticism. And I'll just go through some of the details here. You mentioned, and we came into this with a little bit of sound in part of that interview, where she really targets what's going on in terms of the cost of living. This is being polled as one of the key voting issues that is kind of driving the voting decisions coming in November. That among what's happening at the U.S.-Mexico border. And then, of course, abortion rights as well, not to mention gun control. Those are the four key issues. But the economy, inflation is top of mind. And that is the argument that her administration and she is really catering to. I think the big question here is how much of Harrisnomics is a continuation of Bidenomics. And the answer is quite a fair bit, and even goes one step further. But, Jumana, it also, like I said, invites a lot of criticism. The last time we were talking about things like price gouging, price controls, limiting some of the things that corporations have to do to increase their profit margins, which, of course, affects the way the stock market trades. Well, the last time we had that conversation was back in the 1970s, where, again, inflation was such a hot topic. It led to Richard Nixon, who, of course, was a Republican president, leading to a 72-day cap on all prices, which ended up having pretty disastrous effects for the economy, despite the intention being the opposite. So that's the kind of criticism she's dealing with when it comes to her economic policies.
Yeah. So, Kriti, let's talk about how yesterday's interview is likely to translate to voters, to undecided voters. I'm just looking at the latest polling averages. Harris seems to be ahead of Trump now. If you just take the average, polling at around 48% versus Donald Trump, 46.2%. Will this interview drive more momentum, or is there a sense that things are beginning to stabilize at this point?
Definitely the latter, Jumana, and I think that's a key point here because when you look at what political strategists are really saying around the polling numbers, she's had a lot of momentum driven by a lot of key events. First off, taking over from President Biden as the party's key choice, then a very exciting, some would argue, a VP race in terms of who her top pick would be, followed by a pretty energizing Democratic National Convention. So she's had a couple of kind of key events, not to mention key rallies in places like Milwaukee and arguably Pennsylvania as well, that have really given her and her base and her campaign a little bit of juice. But the question is, how long does it last? And the expectation is that going into September, you will still see things stabilize. So this edge, even a less than 2 percentage point edge, as you point out correctly, may actually fade as we get closer and closer to the election.
Yeah, only 8 weeks away now. Really, time has crept up on us. Bloomberg's Kriti Gupta, thanks so much for that analysis. Now, to some of the other stories making news this morning. Bloomberg understands that UK's top financial regulator is set to delay the next wave of bank capital reforms. It marks the latest example of a major global rulemaker abandoning its timetable for the changes until the US finalizes its own package. Now, sources say that the Bank of England is poised to announce in the coming days that it will postpone its entire package until January 2026 at the earliest, as it monitors international developments. Now, Dell outperforms revenue expectations in the second quarter as customers bought more of its gear designed to handle AI workloads. Orders of AI-optimized servers were $3.2 billion, up from $2.6 billion in the previous period. In the fiscal third quarter, Dell expects sales of about $24.5 billion, in line with analyst estimates. And Bloomberg has also learned that Nvidia has discussed joining a funding round for OpenAI that would value the AI startup at more than $100 billion. Apple and Microsoft are also in talks to invest, according to sources. Now, if the discussions move forward, it would mean the three most valuable tech companies are all backing OpenAI. That's quite something. All right, looking ahead to some of the major data points that we're watching out for. There is an EU ministers, an informal meeting taking place in Brussels today. We were just speaking to Oliver Crook about the potential nominations of some of those senior jobs. So that's something to watch out for. Then at 10 a.m. UK time, we get the Italian CPI print and the all-important Euro area CPI print. This after Spanish and German inflation figures yesterday came in lower than expectations. That German figure actually coming in at 2%, so in line with the ECB target. Yet to see what the aggregate figure is going to look like. Analysts are penciling 2.2% for Eurozone whole, but is worth pointing out that yesterday's lower than expected inflation data did drive a rally in fixed income. So something to watch out for as we head into the ECB meeting. 1:30 p.m. UK, as ever, we've been talking about this, U.S. PCE numbers to watch out for, the Fed's preferred inflation gauge. Will we continue to see this inflationary trend? How is it going to impact market expectations of what the Fed do in September? A big one to watch. And then finally at 3 p.m. UK time, we have the University of Michigan August Consumer Sentiment Survey to just get a more complete idea of how U.S. consumers are viewing the economy. All right, coming up, we are going to be speaking with Janet Mui, the head of market analysis at RBC Brewin Dolphin, as traders look ahead to the release of that all-important PCE print. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Fed's preferred inflation gauge is due later today, the last reading before a potential rate cut next month. Bloomberg MLI's Mary Nicola joins me right now. Good to have you with us just to, let's say, get a little bit more granular detail on what to expect from these numbers. I'm just looking at expectations here for the year-on-year figure. People are expecting 2.5%, but perhaps the upward surprise could come from the core PCE figure, which is expected to come in at 2.7%. Why is that a surprise? Because it's going to be higher than the prior month. That's not what the Fed wants to see.
It's not, but for the market, it's really about if it comes in line with expectations. Because right now, what the Fed did, especially at Jackson Hole, is pivot the market's expectations and the focus on the labor market. Jerome Powell made it very clear that he doesn't want to see any further deterioration in the labor market. So yes, PCE is important, but it really comes down to the labor market and jobs right now to really determine the path of the Fed. So whether they cut 50 basis points, 25 basis points, and how much more they cut, and how much market expectations goes on the back of it, I think will be more dependent on the labor market than what we see from core PCE.
Yeah, and also it's not just the U.S. where we get important inflation figures today. We've got the Eurozone figures coming out later this morning, too. After yesterday's downward surprises from Spain and from Germany, how are the expectations evolving into today's Eurozone inflation print?
Yeah, we could start seeing that another downward surprise just fuels expectations of more rate cuts from the ECB, and the ECB becoming a little bit more aggressive, because at the end of the day for them, it really is all about their inflation mandate. And as long as they move more and closer towards the 2%, there's no reason for them to hold back and start moving more towards the neutral rate. There's no reason for policy to be restrictive if you have inflation going towards that 2% target. So I think Eurozone becomes a lot more critical, especially at this juncture, of how quickly the ECB will continue to cut rates.
Yeah, and was one of the reasons why we saw a turnaround in the currency yesterday, the euro dipping after those inflation numbers came through. Bloomberg analyst Mary Nicola, thank you so much. Well, joining us to discuss more is Janet Mui, head of market analysis at RBC Brewin Dolphin. Good morning to you, Janet. I was just taking a look at how markets have fared this week, and there's been so many events for investors to piece together. But at the end of the day, the Dow is at another record high. S&P is very close to a record high. Are investors once again getting ahead of themselves in terms of what they're pricing in and pricing out of the Fed by the end of this year? 100 basis points of rate cuts priced in now.
Yeah, hi, Jumana. Thanks for having me. I do think that for the bond markets, there seems to be a lot of rate cuts being priced in there. As you mentioned, 100 basis points this year and further 125 basis points for next year. So I think it all depends on the economic situation. If we continue to see economic expansion, I don't think these sort of rate cuts are justified. On the equity market, I think there are some good news. I think the economic resilience is there. Investors like those data from the U.S. recently that shows the U.S. consumer is actually resilient. And of course, we're looking forward to rate cuts. Although I say, probably too many rate cuts are priced in, but we are, turning to the easing part of the interest rate cycle. I think that is significant. And of course, corporate earnings season is so far so good. And we got Nvidia's result out. So a cloud has been lifted out, I think. So there are just more reasons for markets to keep rallying.
Yeah, so I wanted to ask you about Nvidia because so much of the leadership this year has come from Nvidia, from a handful of stocks, Magnificent Seven, we talk about them. Did we learn anything yesterday from Nvidia's earnings that should dent some of the hype around AI?
So we think that the results are actually very strong in terms of the actual earnings and the guidance. And I think that, investors could be a bit sensitive around the earnings season. Of course, things can get a bit volatile, particularly with such lofty expectation going into the event. We don't see the numbers as anything concerning. We think it shows demand is still very strong. Lots of demand from hyperscaler and actually from a broad range of companies. So we think that AI infrastructure theme is intact. And we continue to think, Nvidia is a leader, of course, and primarily because of its CUDA software and the whole developer ecosystem. We appreciate that the stock is volatile, so we think that it is perhaps a better way to access the theme via a basket of AI and semiconductor-related stocks.
Yeah. Do you not worry about concentration risk, though? And again, if you turn to, it wasn't that long ago, it was only a couple of weeks ago, we were talking about this big VAR shakeout in the market because of such concentrated positioning in specific trades like the yen carry trade, like the Nikkei, like some of those AI stocks. Are you not concerned that there is too much of a buildup in positioning in just a handful of pockets in some of these assets?
I think these concerns will continue. I think we do need to see ongoing strong results from these tech mega cap companies. But I do think that in terms of the market movement, as you said, the Dow is record high. I think the S&P 500 equal weight has reached a record high. So there seems to be more broadening out of the equity market rally, right, beyond the big tech. So I think that is actually a positive development for us to see. And so overall speaking, I think as long as the economic resilience continue, if we get the rate cuts, I think this ongoing broadening to the smaller and mid caps will continue. And of course, beyond the mega caps will continue because all the companies out there is going to benefit from these easing financial conditions.
Yeah, I want to ask you about one, I think, quite successful position that you have in your portfolio, and that you are overweight gold. Gold had another very stellar month in the month of August, up 4%. Why do you think gold has done so well this year? What do you put it down to? And do you think that it has legs to continue going?
Yeah, I think so. So basically for the first half of the year, right, I think gold prices were sort of disconnected from its key fundamental, which is real interest rate. But you got other supporting factors such as central bank buying, particularly from emerging markets. And of course, I think Chinese households also buying gold because of the lack of investment opportunities there. The house prices there and equity prices there falling in China. So they're seeking alternatives. So that's really the structural elements. But I think in the past couple of months, right, gold prices have moved more in line with real bond yields, which means inversely moving together. So we think that this would be the main driver going forward, given that our view is lower interest rate, and I think real bond yields is going to come down further in the U.S.
Yeah, very clear. Janet, always great to talk to you. Thanks for joining us on this Friday. Janet Mui of RBC, Brewin, Dolphin. Well, plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We're going to round up the show taking a look at some of the charts that we think should be on your radar. Namely, let's start with the PCE print because it is going to be a major focus for the investment community as we head into the data print in a couple of hours' time. And here you can see that the trajectory is quite clearly moving lower. There has been a disinflationary trend very pronounced in the U.S., but you want to watch out for core PCE. We were just talking about that. If it does come in at 0.2% month from month, that would lead to an annualized number of 2.7%, which indicates a slight uptick from where it was the month before. But at the end of the day, the Fed has been emphasizing the weakness in the labor market. So perhaps investors will be willing to look through that data once it comes through. So keep an eye on that trend for core PCE. But it's not just U.S. inflation we're watching out for. We're also taking a closer look at euro area inflation, too, will be a key signal as we head into the ECB meeting next month. And about 80% probability of a rate cut is now priced in for the ECB in September. We are expecting further moderation to that headline inflation number. The last number came in at 2.6%. The consensus is that it will come in around 2.2, albeit after yesterday's downside surprises to Germany and Spain, we might get an even lower number. So you could say the whisper number for euro area inflation is actually lower than that 2.2% expectations. And then finally, it is the end of the month or close to the end of the month. So let's just take a quick look at how cross assets performed throughout the month of August. And you can see it was a pretty good month for commodities, for fixed income, for equities, but not a good month for the dollar. In fact, it is 2 months of declines for the USD back to back. Its worst month for the entire year for the USD as markets start pricing in a more dovish Fed for the rest of this year. But that was it for Daybreak Europe. I'm Joanna Bersacci in Dubai. Stay with us because the opening trade is coming up next. This is Bloomberg.